Welcome to Retirement with Rick. I'm your host, Rick Rodriguez, SVP and Retirement Mortgage Specialist at VIP Mortgage. Today on the show, I'm pleased to have Rick Cosgrove from Savon Estate Planning, a division of Cosgrove Financial Services. Rick has spent 25 years working in the financial services industry. His focus is providing sound estate planning and a concierge level of support to his clients. His passion is to assist others from a help standpoint, as opposed to a sales standpoint, and helping people avoid probate, also known as the Probate Killer. Welcome to the show, Rick Cosgrove.
Thank you for having me, Rick Rodriguez. I appreciate being here. Thank you.
Absolutely. Thanks so much. The Probate Killer. I mean, that's a tagline. Can you explain exactly what you mean by the Probate Killer?
Well, I see probate as a problem. You know, my family experienced it a lot in the 90s in about an 18-month span, and it can be avoided. So rather than just provide a service, I'm trying to solve a problem, and that's to kill the probate process. So when it came to branding myself, somebody, I don't even remember who, called me Probate Killer. And I thought, I'm running with it. And I branded myself through social media and everything else and just kind of roll with Probate Killer. I'm trying to kill the process.
I love it. I mean, that it's such a strong name that sticks. Like you hear that and you're like, it's like almost like a superhero type of tagline, the Probate Killer to the rescue.
Yeah, we were with it.
I love it. One of the things that caught my attention is you say you're coming from a help standpoint as opposed to a sales standpoint. Can you elaborate on that a little bit more?
Well, you know, my whole career was always helping people. And I found that when you truly just help people, the sell comes. You don't have to sell. Some salespeople are overly aggressive. I always just had one target in mind, see as many people as I can and help.
Yeah.
Whatever it was I was doing. And I knew that would build trust, and just seeing the most people and helping the most people would lead me to sales, of course. So everything I do is about helping, just helping people avoid a process, helping people get their documents in place. Everything's helping. I like it better than sales.
Yeah. And I'm sure that resonates more. And with your background, tell me a little bit about just how you got into how you got into estate planning. I know that you had some previous experience in retail banking that kind of helped, I think, catapult your motivation. But what did you see in that space that had you, I guess, maybe pivot to do the type of work that you do today?
Yeah, so try to make this long story short. My family was affected by probate several times. We lost everything, and the last time, after my family lost everything, I jumped into a banking career, and I became a bank teller. And I didn't know nothing. And my bio needs to be updated because I'm over 30 years in this now.
Oh, correction. Let's make sure we...
No, that's I didn't update the bio. So, when I was in the banking, I was being pressed for a goal. We had to hit loans.
Yeah.
And ironically, I'm sitting in a loan firm, a lending firm here, but we had to hit loans. I'm being pressed. And I asked my grandmother, whose house was free and clear, to do a loan. And as we get down to funding, the loan officer says, Rick, we're going to fund your grandmother's property outside of her trust.
Ooh.
And I didn't know what that meant.
Yeah.
But I said, okay. And they did that. And we will quit claim it back to the trust after the loan funds. Well, grandma passed 6 days after the loan fund. And we're caught outside of her trust. And we're in probate for the fourth time in 18 months.
Ouch. Yeah.
My fault. I got bad advice from a lender, and I learned. I got thrown out of probate court over and over, trying to do this on myself, just trying to figure it out, and I couldn't. So that was the last time I ever sold a bank product. I made it my sole mission to make sure no other family ever went through that again. Made it my sole mission to make sure every family had their assets in a position to transfer after death to their loved ones. And I'm in the bank, so the beneficiary is an easy one, right? Yep. This is in the early 90s to mid 90s. And again, I just helped as many people as I can. And I reviewed ownership of accounts. I wasn't pushing checking accounts and savings accounts.
Right.
I was opening a lot of them, but I was building trust by reviewing ownership of accounts and making sure their ownerships were correct. And in most cases, they weren't. But then I diagnosed something in the banks that was taking place. They would change how they enter customer data, their CRM system, if you will. And we go through a training for weeks, and then, over the weekend, IT would do their thing. We come in on a Monday, we're live on a new system. And trusts were falling off of accounts. And the banks were putting families in a probate position. Unintentionally, but nobody knew it. And clients were coming in to settle their loved one's estate, and they were coming in with their trust paperwork, and the bank was saying, we don't have your account in the trust.
Wow.
And they were saying, well, I was here with mom and dad when we did it. Sorry, we don't have your accounts in the trust. And it wasn't until one of my clients came in and I had the paperwork. I kept paperwork. Because around that same time, identity thefts on the rise were going to imaging. And the top of the house is saying shred all the paperwork. But see, I didn't shred my paperwork. I was a hoarder of documentation. I made my client proprietary to me, and I was able to advocate for a client. And it was at that point I diagnosed a major problems in the banks. It was throwing people into a probate position.
Sure.
Now I leave that bank and go to Washington Mutual, who came to California. This was in '08. And you're dealing with a lot of mergers and acquisitions. When Washington Mutual came to California, they acquired a bunch of banks. And same plays, ownership of accounts. Train my staff, I'm managing now. Just ownership, that's all I want you to do. See as many people as you can and ownership of accounts and do some FDIC insurance stuff. And they could have, systems were changing. Washington Mutual acquired a bank. Those banks that were no longer in business, their stuff had to map over to the Washington Mutual. And they weren't mapping over properly. Trusts weren't carrying over. Chase acquired them September of '08. What do you think happens? We're changing into new systems. What's happening? Trusts aren't mapping over correctly. And these families that had put themselves in a position to avoid probate were finding themselves in probate. And what I realized was that although I'm in a field dominated by lawyers and attorneys, right? They prepare these documents, but they really don't dictate a probate. They, will get documents in place. They'll help facilitate the process that can be avoided. It's the banks, if account ownership's not set up properly. It's a title company, if a home's ownership's not set up properly. It could be an investment firm, if they didn't put beneficiaries or add a trust to an account. So in my business, I focus on that. I focus on really, truly helping families avoid probate. I focus on staying in contact with my title companies. What are you seeing? What's new? What's come across your desk? I need to be on my toes for this. The banks, what are the banks doing? And then I coach to that.
And I know you cover a wide array of services. What, as far as the core services, I know probate and obviously, as you said, that story, a lot of need and value for what you did there, and that being one of your main services. But I know you offer a variety of different services. What are just some of the core services along with being the probate killer?
Certainly. So, I'm a fully licensed insurance agent. I don't produce a whole lot in that field because I'm more passionate about helping people avoid probate. So we get the documents in order. We prepare the trusts. We want to protect for after death. We want to make sure that the named individuals are in there and that all assets are transferred properly. They call that funding the trust. We protect against incapacitation through your proper power of attorneys, guardianships, conservatorships type stuff. We want to avoid those court hearings. Obviously, all your medical directives, whether it's your health cares, your living wills, pour over will, and then I do the deed work to make sure the property gets transferred. So I create the documents. We customize them to the liking of the family. There's two things that occur, right? We got to protect depending on age of premature death, bad accident, unexpected illness. And then obviously the goal is we all advance in age and we grow old, and then, Father Time catches up with us. And there's different strategies. Our children might be minors when we've acquired all these assets. We got to have a different strategy in place with how your assets go. Sure. Our children might be now adults and we've grown old, and the strategy might be different there as far as how they get them. So I like to get very customized within my documents. And really carry out their wishes and how this money's handled, especially when we're dealing with minor children.
Yeah. And I heard you say a lot, and just from your services that you put out there, asset protection. what does it actually mean in practice, and how can individuals benefit from that? And are you finding that a lot of people don't have the proper asset protection in place? I assume that's part of why you're doing what you're doing, is because I'm sure you've come across that there's not enough or there's probably still a good amount of people that, in your opinion, don't have the proper asset protection.
Yeah, and asset protection is a broad term if you want to know the truth. It's, what are we protecting from, right? I mean, there's a lot of things we're protecting from. So for me, it's preserving wealth, it's preserving your assets and getting into your family. So when I talk about asset protection, and you hear the term, it's kind of like mortgage protection and life insurance. It's a 30-year term insurance policy that just covers a mortgage, right? But we've gotten gimmicky because it's a sales pitch, a marketing strategy.
Sure.
So when you hear about asset protections trusts, they all are asset protection. So we're protecting against the probate process, because, I look at it as I want to protect your assets to make sure they go to your family. Okay, we could be protecting against Medicaid, right? If we got to transition into the government, not enough people plan for their long-term health care. And if they're on that fixed income and they're, we've heard the term, cash poor, equity rich, right? They got a lot of money in the home, but we want to preserve that. We don't need, if they got to transition on the Medicaid because they're on a fixed income and they're below the threshold for long-term care, and that's where an irrevocable trust, right? We got two trusts. We've really got two trusts, revocable and irrevocable. And they serve different purposes. On the revocable side, you still have ownership of the assets. On the irrevocable side, you're passing ownership on to the heirs of your estate, and you're removing yourself. You remain grantor of the trust, but you're removing yourself from managing it as a trustee. And now you can say that I don't own this asset. We've already moved it, essentially, and we're protecting against Medicaid. There's a little more to it without getting specific into Medicaid, unless we want to go down that path. But we want to do that, and that's really when we start hitting in our 60s. We want to look at those revocable trusts, look at our overall financial picture, and determine, is it time to move out of this revocable trust and into something irrevocable? But that's income's going to play a part into that, whether you would even qualify anyway. And then, of course, if you've already planned for long-term care. So we got to get into the benefit side of it.
That's a great point. If we can elaborate a little bit more on the difference, because the topic came up not too long ago for me as well. In my business, I can't remember the last time I've seen an irrevocable trust. Most of them are revocable.
Correct.
Where would there be a benefit to the irrevocable trust? And I'm asking that way because, again, that's, for me, that's the minority of what I see is the irrevocable. So I'm trying to determine for my own sake and the viewers out there, when would an irrevocable trust make sense?
So the first one is obviously, like I just mentioned, Medicaid recovery. We're getting into our 60s. We're looking to transition on. We want to protect that. Medicaid has a 5-year look-back period, right? So it's not like you could get diagnosed with a terminal illness, you transition on to Medicaid, and you're experiencing these enormous amount of costs, and then you transfer everything out, because they will come and recover. In fact, I'm dealing with a client right now who didn't want to let his wife go, kept her on life support for 3 years. They put an $800,000 lien on the property.
Wow.
Medicaid. Now, that exceeds all the equity and what have you. It's a whole nother thing. So that's one. So while we're still healthy, but we start hitting into that age, we look like we're going to transition. We want to protect against Medicaid. If it's a home you're not doing anything with, you're not looking to refinance, maybe it's free and clear, it's time to move it on to the kids, the beneficiaries. Let them take ownership of it through an irrevocable trust. The other thing is really liability protection. Your movers and shakers that are out there using these trusts as income, right? They are entities. They can generate income. You might have a separate trustee managing them, a corporate trustee, if you will. You're doing a lot of things that put you in a liable situation that could exceed insurance possibly, and you want to protect your assets from that. So you go into an irrevocable trust, you have other people manage that, so you can't be sued for the assets held in the irrevocable trust because they're technically not your assets.
I see. Okay.
So that's the real difference. But you hear about all different types of trusts. Like I said, most people go with the revocable, it's the most common. I do both, though. I've done several of both.
In general, misconceptions. Are there misconceptions in estate planning? What are maybe a few off the top of your head that maybe we could address that maybe people have, and just just overall, or maybe what hesitates them from getting into estate planning or putting together a trust? Is there any common misconceptions that you come across?
Well, I don't know about misconceptions. The thing that the roadblocks, if you will, is always going to be price. It's always going to be price. Is it affordable? You get a consultation with an attorney, they hit you with a $3,000, $4,000, $5,000, up to $10,000 price. You take in the information, you go home and you say, man, I don't want to spend $3,000.
Doesn't pencil out.
I'll let my family deal with it.
Right.
Misconception, I guess, would be people don't really understand the cost of probate and what it is. That's why I'm on a mission to educate. And it's a court process, and an attorney's going to get paid, and there's a statute of how they get paid, and they get a piece of the estate essentially. And I don't think people understand what it is. Therefore, they don't really know how to avoid it and what they can avoid. And then the complexity of it all, right? They're complex documents. They're wordy. A lot of legal jargon in there. And I don't come from, like I said, the legal perspective, because I don't give legal advice. I'm not an attorney. So I'm not here to give any legal advice, but I focus on really 4 components and keep it simple. And I find when you keep it simple, it makes it easier. And this is how I coach to it in my seminars. The first component, and I like to get this out, is your grantor. Could be known as the settlor or the trustor. That's who's the originator of the trust. Could be an individual, could be joint. Then your acting trustee. That's who's controlling the trust, who's in charge. And in most cases, your grantor is the same as the trustee. Then this is the most important piece of the whole puzzle, and this is how you avoid probate. That successor trustee, who's authorized to act on your behalf in death. You got to sell a house on behalf of a decedent. Your title company is going to get a copy of the trust, and they are going to look for that person. And that's who they deal with, and that's how we're avoiding probate. And then the fourth is your beneficiaries, division of assets. How do you want your assets to go, and what do you want that to look like? So that's kind of the trust in a nutshell, to keep it simple without getting into the weeds of all the legal jargon of a 40-page document. And when you keep it simple, it doesn't become overwhelming to the family. So I don't know if those were misconceptions as much as roadblocks that I find people coming into. I will give you one misconception that just hit me, and that's that you record a trust. You don't. You want that anonymous factor, right? They're pretty much furnished upon request. They don't get recorded. You can record anything, but you don't want that public record. So it's really furnished upon request. So that's a big one. A lot of families think those need to be recorded.
So the trust doesn't actually get recorded, but like, for example, if you put a house in a trust, that gets recorded like in public records that the house at such and such address is now in the ABC Living Trust.
That's correct.
That part gets corrected or recorded for title purposes, but what you're saying is the trust itself. Some people do record it, and where does that show up, and what records does that show up? A recorded trust.
It would be at the county recorder.
Okay.
When I go and record a deed, we're transferring out of an individual's name or a husband and wife, unmarried person, married person, depending on how it is, and we're transferring out into their trust. And there's 2 ways you could do it. You could keep your names on the trust as trustee on the deed, or you could just go straight to the trust. Some people will use their last names in their trust. Others prefer not to, and they come up with a fictitious name. But when we go record, I provide the trust certification as supporting documentation to the county recorder. They scan that in their system, but it really goes nowhere other than to the assessor, again, for supporting documentation when recording that new deed. Now the property's been transferred and title shows it's in your trust. You're good. Your trust isn't on file anywhere. Should you choose to, you would just go down to the county recorder and do a public records request or search and pay their fee and couple of dollars a page or something like that, and get a copy of it if somebody wanted it. But it's really first upon request. You go to sell a house, title company is going to ask for a copy of the trust. They're going to pull title, see it's in a trust, ask for a copy of the trust. Verify the owners of the trust are deceased through a death certificate, and then go straight in that trust for that successor trustee, and then verify them through identification and so forth. And now they know who they can deal with. And that's avoiding probate right there.
So impactful. I can only imagine how, you can have two different cases, someone who doesn't have the protection and has to go through a probate process versus someone who took your advice and did what they were supposed to avoid probate. Can you give me like maybe a recent example or one that just sticks out from memory where your services made a significant impact on someone?
Well, yeah, actually and let me preface this, and this just happened in the last 30 days. Let me preface this by saying it is much better to have these conversations around death. We're dealing with death, folks. It's much better to have these conversations and put a plan in place when we're healthy. Okay? It's an easier conversation. Family I've been taking care of for years calls me, and the sister was just diagnosed with a terminal illness. On Friday, they're senior citizens. On Friday, she was in the gym, working out, doing her workout group with her senior citizens, feeling good for the most part. Started feeling bad over the weekend. Went to the doctor on Monday and was diagnosed with terminal cancer and was given a month to live.
Oh, wow. Horrible.
She passed away 21 days from her diagnosis. Out of left field, floored this family.
Wow.
Completely caught them off guard. Totally unexpected. So I got the call immediately, and they said, Rick, we need you. We need you to get out here. So I pretty much fast-tracked them to the front of the line of my production, and I ran out. I met with her. She was still cognitive and knew what was going on, and we got a trust in place. And we got a trust in place, and we got her taken care of, and then she succumbed 21 days later, and now we're right in the middle of transferring her home into her daughter's name now, and we did a trust for her daughter right out the gate. So we're coming out of her trust and into another one. So that was impactful because 21 days. And they're in a probate position, and now they're dealing with an attorney in the courts in a 9 to 12 month process, and some costs associated with it, and what have you. So those are tough situations to go into. It's emotional. It
Sure.
gets emotional, and you feel for these families. And I will always, one of the things, and ironically, and by no means am I, trying to talk negatively towards an attorney here, but their attorney that they were already working with refused to do it.
Why?
They had just finished up with a divorce. It's an estate planning firm, and they just wrapped up a divorce, her and her husband. And we were a few other moving parts, moving him off a title as well. And then she gets a diagnosis, and they went directly back because they were already working with her. And they said, we can't do this that quick. And then they called me and said, Rick, the attorney that we're working with on the divorce, who they offer estate planning services in this firm. It's family law, estate planning. They have a bunch of different facets. Wouldn't do it for him. So I went out there on a Sunday, after church, went out there and met with the family, and we got them taken care of. And another thing that's important in these cases is having a doctor declare that the individual's of sound mind. And, I operate based on experience, and I advise based on experience. And I ran into a title company one time who, there was somebody, this was years ago, who passed away very quickly in between. And then they were selling the house, and the title company wouldn't do it because they decided that it was their job to diagnose cognitive skills. And they said there's no way that someone could have passed away in 30 days and been cognitive enough to have executed these documents, so we can't service title on the deal. And so it's important, for other reasons as well, that when you're dealing with something like that if a doctor can declare that, And she was of sound mind. Her body just broke down very fast. So yeah, I think that was pretty impactful. I mean,
I felt it. I mean, yeah, I can only, I'm envisioning how it could have gone one way, disastrous, or the other way. And luckily that they contacted you and you were able to put it in place in a short amount of time. Yeah. Speaking of seniors, I mean, that's all I work with. And more oftentimes than not, I come across clients who don't have proper estate planning for whatever reason. Tell me the importance of seniors who maybe never did any estate planning earlier in their life. Why the importance, or if the importance is still there at this juncture of their life, and why potentially they should look into this. I imagine some might think that for whatever reason, there might be challenges as to why they may not be able to put a plan in place, whether it's a trust or anything else. Maybe, like you said earlier, maybe it's monetary reasons. But the importance of a senior at this juncture in your life to have something in place. Speak to me about that.
Yeah, so it's definitely important. It's funny, when I would work, and I still do, the senior circuits, and I've went to the different senior expos, and I've had tables out there with my literature, and their favorite saying is when they, what do you do? And you go into it, and that's my kid's problem. They can worry about that.
Yeah, I've heard that too.
Yeah, right. And sure, it can be. My response is, don't do that to your children. Let's avoid it. And let's make life easy for them. Do you love your children? Yeah. Well, okay, then let's just make sure we're taking care of. But at the end of the day, it always comes down to assets, right? Now, when we're dealing with seniors, let's talk about the division aspect, right? If they got adult children. And there's all kinds of different scenarios. Some have no children. Some have nobody to leave anything with, too.
Yeah,
I've come across that. But if, for the sake of this scenario, they have children, it's really an asset check, right? If they do not own a home, they don't necessarily need a trust, unless they're super wealthy with other investments and assets just outside of a home that have to go in a lot of different directions with a lot of restrictions. But in most cases, it's just passing on to the children, right? So if they don't own a home, we just got to make sure we got beneficiaries set up properly and what have you. If they got a lot of assets, a lot of money, it's got to go in different directions, or there's disinherited children, stuff like that, then we might want to go the trust route. Okay, but direct to beneficiary is always the quickest and easiest way to settle an estate. So for our senior citizens, when we work with them, is the first thing is we do an asset review. And what I always tell my families, and I always preface this, is I don't need to know the amounts. I don't need to know how much you got. I don't ever want them to feel like I'm adjusting my price based on their net worth. So I eliminate that, but I do need to know what they have. And it's really a quick interview. Do you own a home? Do you have life insurance policies? Do you have investments, stocks, bonds, mutual funds type stuff? Do you have retirement, old retirements outside of Social Security, some 401k rollovers, stuff like that? Are you on a pension, a PERS? What do we got going on? And then, of course, everyone's got bank accounts, right? And then, we get into an interview of the family, right? And that's going to tell me, I just got my two kids, and it's 50-50. It's a simple one, right? But then you come across estranged children from their parents, and the disinheritance piece gets thrown in there. And now we might want to do trusts. We might want to get specific. So when I work with my seniors, that's really it. I put them through that simple interview, which is really for all families, if you want to know the truth. But we just got to do a quick asset review, and we got to give them those reminders, right? Not enough people are advising. See, my background's banking, right? 27 years in that industry, and without selling products, focusing on account ownership, insurance of accounts. You have to be responsible for your own assets, because the bank's not going to. And with all due respect, they're too busy, and one branch could have 10,000 accounts, households. They can't possibly manage all that, right? So you have to be responsible for yourself. So I always give them reminders, my senior citizens. Go to your bank and make sure you have beneficiaries on your account. If you have a trust, get the trust in play, but at the very least, let's make sure we have beneficiaries. Go once a year. It never hurts. You never know when the bank's going to make changes that could affect you. Your investment firm, your financial advisor, reach out to them, make sure your ownership still looks good. Your beneficiary still exists. Dealt with a client about a year ago, $7 million with a financial advisor. No beneficiaries on the account. Nobody. It's astonishing to me that a financial advisor would not do something as basic as a beneficiary. And my last 5 bank accounts I've opened, they didn't ask me about it. I had to kind of go into coach mode. You know, and then life insurance policies, right? You just want to make sure it never hurts every year, every couple years to just do an asset review.
That was going to be my question. Yeah. How often, if someone's got a trust in place, or maybe they put a trust in, maybe it's been 10 years or so. 2 things is just time itself, the passage of time. Is there a place or a sweet spot, if you will, on when they should have it reviewed? And I would imagine certain triggers. Is there certain triggers that come to mind that should necessitate someone to have their trust re-reviewed by someone?
Well, I would do it every year. I'm an advocate. And if you're my client, and even if you're not my client and you want to, because I always ask people that have these in place, when was the last time you heard from your attorney that drew these up? And in most cases, well, not since we had them drawn up. Yeah. I'll put you in my database and I'll call you once a year. It's a free service. It's a complimentary service I do. Okay. And I'm going to hit you with all the reminders. I'm going to hit you with, have you acquired any additional assets? Have you sold off any assets? You know, when was the last time you've been to your bank to make sure your accounts are still owned properly? Your investment advisor, all your different assets. I'm going to hit them all. With regards to the trust, you know, it depends on, you know, there's life-changing events, you know, sell a house, buy a house, do a refinance of a home. These are important things that we need to look for. Were you younger when we created this trust? Were your children minors and they were in a different capacity? They're still the beneficiaries, but you have guardians in place. You have how this money's structured. Now you've advanced. It's been 15, 20 years, maybe a little less. Now your kids are young adults. Are they in a position that we want to move them up? So really, it's just as you get older, right? We all want to plan for, you know, we're planning for premature death, bad accident, unexpected illness. And then, of course, like I mentioned earlier, that we just grow old and what have you. But as we grow old, our kids grow older. And while they might not have been intended to get the money or the assets transferred to them at a young age, they're now got through school, bad decisions are out the way. It's time to put them in a different role. So we would just do amendments, amendments to division of assets. We don't always have to create a whole new trust. Unless we got to move out of a revocable to an irrevocable. Again, we're in our 60s. You know, we're looking at maybe someday having to transition onto Medicaid or something like that, government assistance. But yeah, that's really it. The refinance is a big one. Okay. The refinance is a big one. Yep. That's why I do my asset reviews. Remember, my grandmother was taken out of her trust. Right. Because a lender told me, we'll go ahead and do it. I'm up to 65 in this town over the last 4 years when the rates were low through 2020 on through. Yep. 65 cases. 65 families that I've come across that were taken out of their trust by the lender and were completely unaware. See,
left unprotected.
Left unprotected. What happens is, because these documents in the process can be overwhelming, and in most cases, it's over people's head. Yeah. So I try to keep it into as simple terms as possible. Yeah. But once it's done and all the initial funding's done, this binder gets put away in a safe box, safe place in the home, wherever. Now it's out of sight, out of mind. Right. Now rates are down into the low 3s, high 2s, and wow. I got to refinance. Right. You get a call. Yeah. We got to go. It's a streamlined rate term, right? Streamlined refinance. It's going to cost you nothing. We're going to save you X. Let's do it. Yeah. It's a no-brainer, right? You're at 6%. You're dropping down to 2 3/4, 3 1/4, whatever it is. No-brainer. What they don't realize in every loan doc package, there's a grant deed in there, and that's the ownership to your home. And if your lender is not mentioning that to you through that process, you have just been taken out of your trust. And if you're not thinking about it, in most cases they're not. It's been put away. I'm done. I got my trust. But you got to remember, An asset isn't governed by your trust if it is not held in your trust. So once that home comes out, you are now sitting in a probate position.
Right.
And remember, 27 years in the banking industry, watching families end up in probate with these documents in place.
Sure.
And all 65 of these said, we're good, our estate's in order. And I said, do you mind if I take a quick peek? I'll pull up your deed.
Wow.
It'll take me 2 minutes.
Yep.
I pull up the deed and say, you're not in your trust.
You're not good.
What do you mean I'm not? Well, this title company, this date, did anything special happen? I know what it is. Yeah, we refinanced. Well, your lender took you out of your trust and your title company recorded. And I'm sorry nobody reached out to you and let you know. But I can help and I'll get you back in there. And that's what we do. And we get them back in their trust. So I'm one guy, right? I'm one guy right now. I'm looking to expand, but I'm one guy. I'm up to 65. There's many more out there.
You can only imagine, right?
Well, 2020 through what, just maybe we'll say about a year ago.
Big boom. Refinance boom. Yeah.
And you know, the loan officers' heads were spinning. They're just burning and churning. And there's a lot more out there that aren't aware they're sitting outside of their trust. I'm only up to 65. So every seminar I do, when I speak to this piece, somebody comes up afterwards and says, oh my God, Rick, that happened to us. Or would you mind checking my mom and dad's house? Would you mind checking mine real quick? Every single seminar, we catch one. So it's so those are events. Refinance, buy and sell of a home. Those are key events. You know, the kids are getting older. Always review your banks. You're in charge of your finances. You're in charge of your assets. You gotta take control and what have you. And we're not thinking beneficiary. It's the easiest way.
Yeah. You know, you said simplicity. I think, especially with the senior population, you know, they, like you said, they do something. It's out of sight, out of mind. At this juncture in life, you know, maybe things don't come as easy. Things are maybe more difficult to potentially even just have a trust reviewed. From that aspect, simplicity. What I hear a lot too is the difference between a will and a trust, and I come across more senior homeowners who have just a simple will because maybe it was simple for them to put in place and don't understand the differences and how they're still, you know, hanging out there with, you know, a lot of risk. Tell us about, you know, just the difference, if you could, about the will and the trust.
I'm glad you went there because that's a great question. And we've all heard the term will, right? Right. Will. And there's, with all due respect to all these documents, you could do them online. I don't advise you do it yourself because there's more to it and you want to make sure that you avoid that probate process. But a will doesn't avoid probate, okay? Now, if it's not a contested estate, right, a judge is going to take a will and it's going to go the way the will says. But we want to avoid that court process. We want to avoid having to have an attorney navigate a process for us. We want to avoid that high cost and that time frame because it can also create financial hardship. So the will doesn't avoid that. A lot of these companies lead with the will. You always see these do-it-yourself will kits all over social media. Oh yeah, I need to get my will. I'm getting up there in age. I need to get my will. Right. They don't really know the difference. And I'll just go to, remember, 4 things in a trust. The third one's the most important to it all. That successor trustee. Yeah. That's who's authorized to act on your behalf in death. That's how you avoid probate, that person. So grantor, trustee, acting, successor trustee, beneficiaries. That's it. Going to have a lot of legal jargon. That's the most important pieces to the whole document. I focus on those 4 things. I hit on other pieces throughout, that it's an amended trust if it's revocable, that when it becomes irrevocable and stuff like that. But yeah, we want to stay away from a will if we own a home. I don't really know. I've had people argue this with me, but haven't really been able to give me the deal. I don't know the value in a will. I don't know what it does. It's going to name an executrix to an estate. Might name guardian within there. You could spell out your wishes just like that piece of paper. You could write them out right there and have it notarized and give it to family members. Say, this is what I want. Make sure this car goes to that person. That my gun collection goes here. My guitars go there. My Rolexes go here. I don't know what a will does. And I've been challenged, but no one's ever been able to tell me. I mean, they tell me, but it doesn't avoid anything. So I don't know. I'm not a fan of them. I only will do a will. A last will and testament we're talking about. So I don't want to get confused with living will. Living will is advanced medical directive. Everybody needs one of those. Last will and testament is what we're talking about here. I'll only do those when I'm dealing with very young individuals, 18, 19 years old, right? It's interesting as our children get older and they're 17 today and they turn 18 tomorrow and we look at them the same, but guess what? They're legal. They're now young adults.
Yeah.
Right. So, but they haven't acquired assets yet. They might not even be out of high school yet.
Sure.
They might be going on a senior trip. They might be in college, first, second year. They might go away to college. We need to get power of attorneys in place. Financial, healthcare. We need to put the parents in a position now to be able to act on their behalf. If something bad happens, they can't act for themselves. It's in those situations when I'm doing that, I'll put a last will and testament in place because the document flow goes that way. You do the last will and testament, add the power of attorneys and wills and get all that in place. So only when I'm dealing with a young person will I do that. But again, it doesn't really do anything.
Yeah, I think maybe it's just from years back, just the word, the will, you think that encompasses all of it. Like, it's and maybe it's starting to change. Maybe where trust is for older people is becoming more of, hopefully, that word that you use is that, hey, I've got a trust in place as opposed to I've got a will.
Right.
Right.
Right. And a lot of companies out there, it's a marketing ploy, right?
Yeah.
They lead with will. They might try to sell you into a trust.
Right.
Sometimes they might not. They just do a will. And like I said, it's you got to really understand family dynamics, asset dynamics to advise properly.
Yeah.
Trust also equals high cost. I need an attorney because that's so I need to step back. Another misconception that you need to be an attorney to do this.
No,
you don't. You need to know what you're doing. You want a trusted person in your corner,
right.
A trusted advisor. When I started my business, I thought I needed to be an attorney, and I got a business attorney.
And maybe that's what keeps a lot of people from moving forward. Either they think that, the effort of going to see an attorney, making an appointment. Of course, when you hear attorney, a lot of people think attorney fees, and this might dissuade people from taking that step further.
100%.
Right?
100%. And I found that there's a huge market of people that don't want to deal with attorneys.
Yeah.
With all due respect to the attorneys,
Sure.
they do their thing, and we need them for certain things. But no, 100%. Because see, I have yet to find an attorney, and I've talked to hundreds over the years, probably maybe even thousands, but they don't really have that follow-up process. So their business model's not really designed to help you avoid probate. They'll put the documents in place, they'll prepare them, but think about this, right? Because I was just told I can't give legal advice, which I don't. But think about this. There's not an attorney in practice that is preparing these documents. Their staff is doing it, who aren't attorneys, paralegals, clerks,
right.
On their back end. They might do the initial interview, answer all the questions. If you need them for a probate on that part of the estate aspect, they'll navigate that process. They got to do that, but it's all paperwork. If it's a non-contested deal, it's all paperwork filing, and there's really no court appearances. I used to do them, and they're painful. So, but you're right. It does. People associate this with an attorney, and with all due respect, you need someone who knows. I mean, I do have 30 years experience with the documents. I did build out a trust department for a financial institution based on why I diagnosed that I mentioned earlier. So I'm not just some Joe Schmo who decided to start doing trusts and wills, right?
Yep.
But you got to be careful. You got to be careful. In the state of Nevada, all you need is a document preparation license to do this. And there's templates all over the place, but just creating a document doesn't avoid the probate process. Understood.
Well, hopefully people will hear that and put those, because like you said, the attorney's model, and no offense to our attorneys, we love our attorney partners,
of course.
But the attorney model is, from what your experience has you come across, is not equipped to really have those triggers in place to maybe do an annual review, for example, with their clients. And maybe some do, I don't know, but it seems like, we're finding those situations where by not doing an annual review, you don't come to find out that they did a refinance in that year. Obviously, we'd like, hopefully, and this is part of what we're doing here, hopefully raising awareness to the actual homeowner that when those triggers occur in your life, that you yourself be proactive and reach out to your attorney or Rick, someone like Rick, to say, hey, I just had a life event occur, and I'm not sure, maybe there needs to be an amendment to the trust. But I think that's super important to point out is that we've got to be obviously always an advocate for ourselves, and you said it earlier, in making sure that we are proactive about our situation and knowing, I think that's so practical. Knowing when these things occur, just setting yourself perhaps that mental note or however else you'd like to put it. That hey, if this happens, I've got to make sure I reach out to Rick or once a year if I haven't heard from whomever. Let me put it on the calendar every October, to reach out to my advisor to just do a review, see if anything that's happened in the last 12 months, would necessitate a change, right?
100%. And, I've interviewed hundreds of attorneys and hundreds more clients who have had documents prepared by attorneys. And I've asked them how I've come to the conclusion, right? Because you're right. I don't want to lump them all in that they all don't do asset reviews. I don't know.
Sure,
I have not met every attorney.
Right.
So I want to preface that. But I asked two rhetorical questions. I kind of preface them with what I've done in my career and what I've seen. And I asked them this rhetorical question: why have I seen so many families end up in probate with these documents in place? And their answer is all the same. They didn't properly fund their trust. That's fancy term for transferring their assets. I said, okay. I said, what do you do to help with funding and ensure they stay funded as they navigate life past the preparation of these documents? They all have said the same thing. We don't want the liability of helping them fund their trust. They're responsible. They give them a worksheet with instructions of what to do with the bank, what to do with your financial advisor, what to do with your home, and it's their responsibility.
Yeah.
And that was a lot of that came through my research and development of what my business model was going to be. And I thought, well, I understand they don't want the liability of it, and I get that, but I'm not going to take on the liability either. It's in my contract. I'm not liable, but I'm going to make it my responsibility. Right. And I'm going to stay with them. My job is not done until all of your assets are in a position to move to your loved ones or whomever you deem you want them to go to, without a probate process.
Right.
So that's how I've come to the conclusion. So, again, not saying all attorneys operate that. Some may offer that. Every attorney they have the capability of making those phone calls annually. They don't, though. They don't.
Yeah. No, I could see a real void there for that. And again, no knock to our attorney partners.
No.
They're busy doing a million other things, I'm sure.
They're in court.
And they're in court. And like you just said, their scope may not include this portion of post-doc preparation. And so, like you said, it's being left up to the homeowner. And that could be disastrous. I mean, some homeowners are, could be on top of it, but certainly with our senior homeowners, as we age, and these things may not be as on top of mind as much, and to have someone who's there who could be, giving that constant reminder and making sure nothing gets past you. I could see a lot of value in that and a lot of need in that as well.
Right. Can I throw something at you?
Yeah.
I know you're the host of this and you're throwing the questions.
Yeah, sure.
As a reverse mortgage specialist, I want to give you a second because this is important to me.
Yeah.
And I think you know that because we've had conversations.
Yeah.
As a reverse mortgage specialist who helps families, and a lot of misconceptions around that, right?
Sure. Oh, yeah.
And you'll eventually dispel all those. But how does somebody who takes on a reverse mortgage put their reverse mortgage in a position of transfer and death? Can a trust be involved on a reverse mortgage?
Yes, it can. And as I mentioned earlier, most of what I've seen has been revocable trusts. That's why I when you were talking about irrevocable trusts, it kind of triggered my head. It's like, wow, I haven't seen one in probably 15 years or so. And in those cases, it would necessitate some sort of change to the trust if they wanted to follow through with the refinance of the reverse mortgage. They would either have to amend the trust. Cases where I know others would take it out of the trust and put it in the trust. There was cases like that, but typically would require some sort of amendment to allow the reverse mortgage to be compatible with the trust. But for revocable trusts, completely compatible with the reverse mortgage. Part of my process is when I first consult with anyone is, how is title held in your home? Is it held in your individual names, or by chance do you have a living trust? And if they say yes, I say, okay, that's going to be, add that to the list of documents that I'm going to need from you, because we're going to have to not only review it from the bank standpoint, underwriting standpoint, to make sure that the reverse mortgage follows the directives of the trust. But similarly, the title company, when we go to record this reverse mortgage, they too have to follow the directives of the trust. And they have to have their own attorney review it as well to make sure it's compatible. So it is part of my process to ask people. And for those who say I don't have a trust, my scope obviously can only go so far, but I do like to nudge a little bit and at least let them know. Say, have you ever looked into it? Have you ever spoken to someone? You might, consider that. There's a lot of reasons that might be of benefit to you, but again, more often than not, I see people who don't have a living trust in place. No, I just went through, I took on an office up in Pahrump, and I had my assistant go through 600. I got a list of way more, but we went through 600 deeds, addresses. Yeah. Of those 600, 583 of them have no trust. Wow. So you're right. Yeah, right. I believe it.
Yeah. So, and that's just in that small market.
And that small market. I can only imagine. So much work to be done. What about, one thing that comes up for me a lot too in what I do is seniors having those important discussions with their other family members or their beneficiaries. Something else that, I tread lightly because my job, my client is the senior homeowner. And ultimately, if they, and I've had this where I've had clients say, my kids don't need to know my business. And of course, that's as far as I'm going to go in either nudging or suggesting that perhaps your children should know about what you're doing. And from my standpoint, and I think this is where, for some senior homeowners, I think this is part of it, is that they want to feel still that sense of independence. I don't need my kids to come in and help me make decisions on what I do financially. And what I tell them is that's not why I'm suggesting that you need to have, or you should have your kids come in to help you make a major financial decision. It's more so that I think there's value in them knowing, as their beneficiaries, what it is exactly that you're putting in place today, so that in the future, if an event occurs, such as death, that your beneficiaries are already a step ahead and understand what their parents might have done years back, put in place. Because one of the unfortunate aspects of my industry with reverse mortgages is that there's a lot of beneficiaries that come in after the fact. Mom and dad have passed away, and they come to review the estate, the home, and they realize that there's a reverse mortgage on the property, and they had no idea. Mom and dad never told them. And number one, that could sometimes lead them to thinking that, did mom and dad know what they were doing? Were they duped into doing this? Did someone pressure mom and dad? They're not here. I can't ask them anymore. But they have that little bit of doubt that perhaps mom and dad didn't make a sound financial decision. And then that naturally just leaves kind of a sour taste in the beneficiary's mind, right? Mm-hmm. But also, unfortunately, and this has been one of the biggest hazards, is that they may not get to the estate in a timely manner. Mom and dad pass away, and it may take some time for the beneficiaries to get involved. With the reverse mortgage, the terms of the reverse mortgage are that when all the homeowners have passed away, this is now when the loan is due in full. And the process for the reverse mortgage servicers is that they first send out notices to the home, and they'll send, any upwards to 3 or so. It's just not just one notice and they start taking action, but they'll send multiple notices to the home, number one, as one way to try to alert whomever is handling the affairs that there's this mortgage that's due. It's come to our attention that so-and-so has passed away, because they're tied into records that tell them they have to be per FHA. The servicer has to be able to meet their servicing requirements, which is when people pass away, the loan is due, right? And they give some time, but the problem is that no one responds to the letters. And then if at the very beginning, going back to what I suggest from the very beginning, which is, do you have any beneficiaries that you'd like to have involved in knowing, not making decision, but knowing about this process, so that fast forward when that day comes, number one, they know. Number two, they've spoken to me, and I've coached the beneficiaries. That's what I do. I let them know. I said, listen, when that day comes, this is what you need to be aware of. There is a clock that's ticking, and as long as you are communicative, you can extend that clock up to a year. There's extensions that can be filed by the beneficiary to give them ample time for the reverse mortgage not to be called due. So that gives them time to sort out the estate, clean out the house if they're going to sell it, put the house on the market. Maybe it's a slow time to sell home, so it could take months. All those things are understandable and are taken into consideration when there's that communication. But when there's not that communication, these are the horror stories. And then a beneficiary comes in and it's been months and there's a notice of default that's recorded on the property. And then you can imagine the impression that leaves on a beneficiary, that once again, mom and dad must have been taken advantage of by this reverse mortgage lender. And now look, they're trying to foreclose on this property. I mean, it could be a nightmare for families. So to the point of the family dynamics and your opinion on, how the beneficiaries should be involved, and then just in your own services and business, how you handle that.
Yeah. I coach to transparency. I'm big on transparency. Talk to your family. There's a couple moving parts. What you just suggested is 100% out there. It's been happening for years, even before they were federally regulated, right? Yeah. And kind of like your solar guys, right? Reverse mortgages had a bad connotation attached to them for years, right? Yep. And you got your salespeople out there who are just, maybe they're not having a good month, and they might want to. If I was in your seat, I'd want the family involved for multiple reasons: my reputation, my credibility, and to make sure we're doing the right thing. Right. At the end of the day, right? Right. Sure. But it's the other aspect to it is, and to make sure they know, right? I mean, anybody can sue anybody. The last thing you need is a family member coming in and saying, you took advantage of my mother. Did you know she had dementia? Right. And you got her on a good day, but I got a diagnosis before you even got involved. And now is there a liable situation involved that you can find yourself in, right? Yep. So it's about protection from that standpoint. But the other thing is the contestment, right? It's, you can have these documents in place. You can have all your assets in order, in a position to transfer. But if families are determined to fight, and they're determined, and they're going to go hire an attorney, and an attorney says, yeah, you got an argument. Attorneys, remember, they're paid to argue. That's what they do for a living. And there's no retainer agreement in this country for any lawyer that guarantees the outcome of a case. In fact, there's a clause in there that's the opposite. We don't guarantee the outcome. But you want to pay me some money to retain me, I will go and fight for you, and we'll see what a judge says, right? So we want to avoid that. But if families are determined to fight, and I'm going to tell you right now, I have two brothers, and if you ask any one of us who our mother's favorite was, we're all going to say we were, right? The reality is, right, we weren't. We're equally, she loved us equally and what have you. But, and we all got along, so there was no turmoil in our family, but I see it. I see it all the time. Yeah. Families fight because mom or dad had this conversation with one sibling and this conversation with another, and they don't jive, they don't coordinate, and now there's a dispute. And the biggest way for families to break up, right? We want our kids to continue as siblings, as family, long beyond us. And if you don't have these conversations with them, it's not about, and you're 100% right, it's that I want that independence still. I'm still making my own decisions. It's not about that. No, you are. It's just about incorporating them into that. It doesn't hurt. And it's going to prevent families from arguing. And the other kicker is when you got siblings and you got the one that never left home, never got their stuff together, they're 40 years old and still live at home. But the other has a family and still sees mom or dad as often as they could as well, but they're also raising a family and involved in activities with the children and stuff. And, the one that never left home always feels the sense of entitlement.
Yeah.
Always feels like,
Sure.
I was there for mom. No, you never got your stuff together and got out the house.
Right.
So yeah, you were there, and I'm grateful that in an advanced age you were there every day. But the reality of it was you weren't, you never left. So it created a convenience. But again, just more reasons to bring the family together and say, here's what my wishes are.
Yeah.
And get them all in a room.
Right.
Let them all ask the questions.
It could be as simple like Sunday dinner, right?
100%.
Like, hey, come all over to the house. Let's sit around and I'm the father, let's say, and I want to sit down and I want to talk to everyone here at this table. And we're not leaving this table till everyone's clear of what my wishes are. And this is an opportunity for us to discuss it as a family. And when we leave here, the goal is to at least we all come to a consensus of what I'm trying to achieve. And it's crystal clear and it's here. Right.
Right. And answer all your
Simple.
questions. 100%. Yeah. And I encourage it. And I like to do that because especially if the adult children are named, I want them to understand what their role is.
Yeah.
They might not know what a successor trustee means. They might not know what that means. And how do I administer a estate? What am I supposed to do? What's this entail? Right. So I like to coach them in advance. Here's what your role will be. And let's hope it's not for a long time. But when that time comes, here's where you come into play and what you do. And, I did this with the family a few months back and the dad brought all the kids and I went and met with them all and he laid it out. And the youngest daughter, the baby of the family, all the others, the three others were established, married, had homes, doing well. They had the baby of the family that's just out of college and still doesn't know really what she wants to do. And they wanted to make sure that the rest of the family knew that she's got a life estate. She's never to be kicked out of this house. She stays here no matter what until she, gets established. But you guys have all made it. You've done good. I'm proud of you. She stays here. None of you, when we're gone, are coming in and saying, I want my 0.25% of this estate. We created it. We put it into the trust, and they all agreed. They were all on the same page. That's what mom and dad want. And it was emotional because now you got the baby of the family is bawling her eyes out because now she's thinking about her parents dying and, this. So, but, it was transparency in that family. Yeah. It was, there's no siblings are going to be fighting. They're a close family. They're going to remain a close family because of the conversation that their parents had with them. Right. So, dinner table.
Yeah, dinner table. I've always thought, and I can see where maybe some people want to avoid the conversation. I mean, we're talking about some tough topics, death being the toughest that we could talk about, right? And it could be very sensitive for not only the parents, but for the beneficiaries. So I presume that could be part of the reservation that people have and just having that Sunday dinner, talk with everyone. But so simple, and it can avoid so many stressors and fights. I mean, you've seen it. I've seen a bit of it as well. That that's the last. I think for any of us parents, that's the last way we'd want to leave this earth is having our kids fighting over things that could have very easily been solved by just simple transparency and a simple Sunday night dinner over pasta, right? Or something, 100%.
Right? No, I'm with you. It's and I speak to that. I get a little more detailed, right? I speak to what I see. Yeah. And I use real life scenarios. I like to work in hypotheticals because these things happen and it's easy for families to understand. And I don't want to see families fighting, and keeping it out of court. And the other aspect of transparency, if you don't mind, Rick, is these things don't have to be secrets. If you're chosen as a successor trustee to carry out your family's wishes, and you're the one that's going to administer this estate when it's over, and a family member asks for a copy of the document, give them a copy of the document.
Right.
Let them see. So it's not a power trip. It's a role that you've been assigned. It's a job. It's a responsibility. It's a fiduciary responsibility. And it's okay to say, hey, guys, here's a copy of the trust. Here's the assets mom and dad had. I'm working with all these different companies, and keep them informed throughout the process. It doesn't happen overnight. These insurance companies, they're not quick to just write checks, right? So it takes time to settle an estate. There's paperwork involved. There's providing documentation. Then there's the waiting game for the entity, if you will, whether there's a life insurance, an investment firm, a retirement firm, whatever, to get the get the paperwork processed, if you will.
Sure.
So I run into families at times where they don't want to give. No, it's none of their business.
Right.
No, it is, because see, now they feel like they're being withheld information, and you don't want that.
Sure. So for senior homeowners out there who might be thinking, hey, I could use a review, or I could use some guidance. Maybe I don't have the right pieces in place, whether it be a trust or life insurance, or maybe they have questions on Medicaid or what it might be. If they wanted to have a consultation with you, what would they need to prepare, or what kind of documents, for example, would they need to potentially round up to bring into you? Like what could we tell the audience, like, how that process looks? Is it over? Because I imagine for some, they might think it's an overwhelming process. Like, I've got to go meet with Rick about my estate planning, and I'm going to have to get into my filing cabinet and bring a big stack of documents to him. And it might be for some just an overwhelming task. How would that look like if someone wanted to have a consultation with you?
It's honestly, it's a very simple consultation. No documentation needs to be in place for me to have a consultation. It's a complimentary consultation. I will speak to somebody as many times as they need to feel comfortable to move forward. I'll give it to you here. It's really very quick. I start with family. Are you married? Do you have children? Do you have grandchildren? Is there stepchildren involved? Or are we dealing with a split family?
Yeah.
Boom. Document it. Everybody knows that off the top of their head.
Yeah.
Right. So you just got to know your family dynamics.
Right.
Okay. Then I hit assets. I preface it. I don't need to know how much you have. I just need to know what you have, and I'll hit them all. So do you own a home? Yes. Check. Of course, you got bank accounts, checking and savings, right? Everyone's got those.
Yeah.
Do you have life insurance policies? Yes or no? Do you have retirement accounts from prior employers, current employers? Yes. Do you have investments, stocks, bond, mutual funds, crypto, stuff that you're playing with and you're doing? It's either yes or a no. That's pretty much all the assets somebody will have. Personal property, vehicles are personal property, and we got classics, we might want to address them, but that's all falls under personal property, right? So if there's any stuff like that, gun collections and stuff, we get into that at a later date.
Okay.
And that's it. Then I will now I know how I need to advise and what we need to deal with. And then we kind of get into it and what have you. And it just really depends on, how their assets will be divided. I'll ask them the question, have you put any thought to how you want your assets to be divided? Do you have any specific instructions? We call that special distributions. And usually on the initial consultation, I leave them with, here's what you need to think about. Don't have to have these answers today. This could be our second call. A lot of times they already know. They've already put the thought to it. A lot of times they're not sure. Who's going to play the roles, right? We know who the grantor is going to be. We know who the trustee is going to be. Who's going to be your successor trustee? Do we want somebody to act jointly as co-trustees and put a couple people in place, or do we want a couple first appointment, second appointment? Then division of assets, your beneficiaries. Put some thought to those things. And then your agents. Who's going to act on your behalf when you can't act for yourself, financially and medically? Who's your decision makers when you're in an incapacitated state? That's it. If you know who these people are, great. Okay. I'll send you out a follow-up email, recap this, and you can start putting it together. If you don't, that's what you need to put some thought to. And then I'll answer any other questions they have. It's literally a 15 to 20-minute conversation. Wow. It's not overwhelming.
Okay.
Again, I keep it simple, right? This could be a 40-page document, this trust. 4 things. Four players.
Right.
Grantor, trustee, successor trustee, beneficiaries.
Right.
And then we get custom with it, right? We can play with it and be as custom, your wishes I carry out in a document. It's as simple as that. Any restrictions you have.
It couldn't be any simpler. It seems like. I mean, there's no tax returns, those bank statements. I mean, things that people would have to feel like they have to drag out.
At some point, I'll need a copy of the deed. If you're in Clark County, which is where my business is housed, or even Nye County, where I have one of my offices, I can pull the deed. There's no cost. Other states, there's costs sometimes. So I just ask that if there's one document you might ever need to pull for me, it's going to be the deed to your home. And that's going to be with your purchase paperwork or your most recent finance. It's going to be in that paperwork. Right. And I lead them to that. And that's just so I can it makes it easier. I don't have to call on a third party to get me the information. If they can't find it, I can get the information, of course, but it's just easier if they provide it. And then all the other paperwork that you kind of just mentioned, it's at the end. Our last steps are after the documents have been executed. Now we got a fund. Yeah. Now maybe we're getting into some online systems and adding this trust in a position. Right. Maybe I'm sending you to the bank if I'm dealing with you out of state. Yep. I'm on call. When you say, Rick, I'm going to the county today, what time will you be there? I'm going to be there between 12 and 2. All right, call me if they ask you any questions you can't answer. I'm here for you. Right. Because like I had one the other day in California. They said, hey, so you're here to record the trust? And she was there to record her deed, but they wanted to, and she called me, Rick, I'm recording the trust, right? I said, no, just the deed. They might need to see the trust for supporting documentation, so make sure you have with you just the deed. And we clarified it, and she didn't have to keep going back and forth, right, to the county. So that's it. No documentation, just at the end. At the end when we fund, and that's our last appointment. And some families got it, and they can handle it on their own, and I just do a 30 to 60-day follow-up to make sure, right? It's my job's not done until all your assets are in a position to transfer to your loved ones. Yeah. Excellent. I know we've touched on a lot of topics here today. Is there anything in closing? Is there anything that we haven't touched on yet that you feel is important that we should? No, you hit it all. I think we've covered it all. We keep it simple. I'll just say it's estate planning is a proactive approach. When death occurs or an illness occurs, you're now in a reactive situation. We want to avoid the reactive situations. We want to come from a proactive standpoint. It doesn't have to be expensive. You want someone quality doing it, and you want someone to know. I would say interview 2 or 3 estate planners before you choose, and go with who you feel the most comfortable. I think it's important. A question to ask is, how do you help with the funding of a trust? And what's your role past the documents? Because I think estate planning for me and my business goes way past the documents, but I think we covered everything. We're avoiding court processes. All these documents are avoiding a probate process, which is a court process, a conservatorship or adult guardianship hearing when we find ourselves in an incapacitated state and we didn't have this stuff in place. That's what your power of attorneys are doing. HIPAA release form will allow you to get access to medical records for your loved one without having to petition the courts to get a paperwork, so they're not a violation of HIPAA. And then of course minor guardianships. So we're avoiding a lot of potential court processes you can find yourself in, or having to use a legal aid center and try to navigate it yourself and what have you, by proactively putting everything in place. Excellent. What's the best way people can get a hold of you? Yeah. So I can first, my cell phone's out there. I carry one phone. I'm not one of those 2 and 3 phone kind of guys. I carry one. You can reach me directly at 562-307-4320. I do have a local number as well, 702-867-3280. You can reach me there as well. Both come straight to here, so just use the cell phone number. I don't mind it being out there. You could also reach me at a couple email addresses, but rick@mrcoz.com, rick@mrcoz.com. It's much shorter and easier than rick@savonestateplanning.com, but you can reach me there as well. And then my website, obviously, is savonestateplanning.com. You can go on there and see all the services I have to offer and all the different trusts that I do and how I help families. Excellent.
Excellent. Rick, I can't thank you enough for coming on today and sharing this valuable information, sharing your services, your wisdom, and helping us better understand some of these very important aspects of protection, asset protection. So you got Rick's information here. Feel free to reach out to Rick. You can also reach out to myself if you have any questions for Rick. And of course, if you have any questions about retirement mortgages, reach out to me with questions and any types of concerns, anything to do with today's segment that you are thinking about, that maybe you need a little bit more information. We're here to help. Thank you for tuning in, and watch out for our upcoming episodes on retirement with Rick.